Welcome back to Explain the Charts, everyone. Today, September 21st, 2025, we're diving into an in-depth analysis of Bitcoin, examining both the significant current events and the intricate details of its price charts. The crypto world is buzzing with major news, particularly the Bitcoin Act, which gained significant momentum this past week. On September 16th, U.S. lawmakers convened with top crypto executives to discuss a proposal to acquire 1 million Bitcoin for a strategic national reserve, an unprecedented move that signals growing legitimacy for BTC as a strategic asset. This news has fueled bullish sentiment, with Bitcoin's current value around $115,140 as discussions progress, potentially influencing global reserve strategies for years to come. If we look at the daily chart from September 16th, we can observe Bitcoin's positive reaction, with the price making strong upward moves. Just after this news, Bitcoin saw a noticeable rally, pushing it well into the $116,000 range, showcasing the market's immediate response to such substantial institutional interest. This surge highlights the anticipation around Bitcoin's integration into traditional financial systems, driving fresh capital inflows. Another monumental event this week was the Federal Reserve's decision on September 20th to cut interest rates by 25 basis points. This is a crucial pivot point for the crypto market, as lower rates generally ease financial conditions, potentially weakening the US dollar and increasing investor appetite for risk assets like Bitcoin. Historically, such rate cuts have shown a mixed short-term reaction, but a strong positive long-term correlation for Bitcoin, as seen with the 100% price increase after the September 2024 cut. However, analysts are warning of potential short-term recalibration volatility following this decision. Zooming into the 15-minute chart, specifically for September 19th and 20th, we can see how the market digested this Fed news. The price action on September 20th, the day of the announcement, shows a period of consolidation around the $115,700 mark, exactly as some analysts predicted. This current range is identified as a precarious level between $115,900 and $117,900, suggesting indecision as bulls and bears battle for control. We can see tight trading within this channel, with high transaction counts indicating significant market activity. Let's step back and look at the broader picture on the daily chart. The overall trend for Bitcoin since May 2024 has been a clear uptrend, marked by consistent higher highs and higher lows, despite some significant pullbacks. We saw a peak around $123,380 in mid-August 2025, which now serves as a key resistance level. The current price action is testing vital support areas established during previous consolidation phases, suggesting robust underlying demand. Examining the more granular one-hour chart from early September, we see short-term volatility, even though this data predates the most recent Fed announcement. There was a noticeable upward move from around $108,000 to $111,000 in early September, demonstrating how quickly market sentiment can shift. Short-term charts like this are crucial for identifying entry and exit points for day traders, but they must always be considered within the context of the larger daily trend and macroeconomic factors. Noticeable volume spikes often accompany these rapid price changes, confirming active participation from traders. Returning to the current price levels, immediate support for Bitcoin is strongly positioned around $115,500. This level is reinforced by current news reports stating it is a critical point for bulls to maintain. A breakdown below this could see Bitcoin retesting the $112,000 area, a previous resistance turned support, or even the $105,000 ETF floor, mentioned by some analysts, supported by $250 billion in ETF assets under management. On the upside, immediate resistance lies between $117,500 and $117,900, where aggressive selling pressure has historically been observed. A breakout above $117,900, especially with significant volume, would be a strong bullish signal. potentially paving the way for a retest of the previous all-time high in this dataset at $123,380. Beyond that, analysts are projecting bullish targets of $140,000 to $200,000 for 2025, driven by continuous institutional adoption and global liquidity shifts. This long-term bullish sentiment is echoed by figures like Michael Saylor and Arthur Hayes, who foresee Bitcoin appreciating significantly over the coming decades. However, it's essential to monitor the 30-day exchange net flow. Sustained outflows indicate conviction in holding, while inflows could signal impending profit-taking. Reasons to be bullish are plentiful. The ongoing advancement of the Bitcoin Act, increased institutional adoption through ETFs, and the positive long-term effects of the Fed's rate cuts. Furthermore, new Layer 2 solutions like Stacks SBTC and Botanics are significantly enhancing Bitcoin's utility beyond just a store of value, enabling DeFi and faster transactions. On the bearish side, we must acknowledge the immediate short-term volatility post-rate cut and the risk of profit-taking, particularly as 90% of Bitcoin's supply is currently in profit. Whale movements, such as the recent activation of dormant wallets, also pose a potential selling pressure, which could lead to rapid price corrections. The rising mining difficulty and energy costs are also factors to watch, as they can influence market sentiment and operational sustainability. In recap, keep a close eye on the immediate support at $115,500. Holding this level is critical for bullish momentum. If it breaks, look for $112,000 and then $105,000 as next potential support zones. For upside potential, clearing the $117,900 resistance with conviction could open the path towards $123,380 and potentially higher targets, with a moderate likelihood of reaching $140,000 by year-end if institutional inflows continue strong. The Bitcoin Act advancing through Congress and sustained positive Fed policy reinforcement would strongly enhance this likelihood, so pay close attention to any updates on these legislative efforts. Always remember to manage your risk and stay informed on global economic indicators, as these heavily influence Bitcoin's trajectory. Thank you for watching Explain the Charts, and we'll see you in the next one for more in-depth market insights.